Now, second questions, as I told you, we have the accounting and the ethical issues combined into one. While this is giving us some flexibility in writing the answer, as I mentioned just now, you can talk about accounting, ethic, come back to accounting, go back to ethic, come back to accounting, and go back to ethic. But this has also imposed us some problems. Is that number one, we do not know in the exam hall how many marks will be for ethics and how many marks will be for accounting. We do not know. And the second problem is if we are having such a flexibility in presenting facts, mixing the accounting and ethical together, can we still earn our 2 professional marks or not? Actually, there's no problem of mixing points together as long as you are talking about the same thing, one thing at one time. You don't want to talk about issue number 1, then you talk about issue number 2, then you go back to issue number 1 again, then you go to issue number 4, you come back to issue number 3. So if you jump order like that, right, this can be clearly seen that you didn't do any planning at all in writing your answer. In that case, you might be scoring very low or even 0 professional marks. So while there is no problem of talking about accounting and ethical issue together, we would want to be carefully executing this decision by discussing one issue at one time. Okay, so that problem should be solved then. But for the how many marks we have for accounting and ethical, this one is really a challenge to us lah. In normal situation, we can see we get more accounting marks than ethics. But the question 5, that is your homework, right? Question 5, we got more ethical issues than accounting issues. Because for accounting, right, we have 5 and 3 8 marks only. But for ethics, we got 10, right? So 8 for accounting, 10 for ethicals. The more normal question, like the one that we're having, the second question, we have more accounting and we have less ethical issues. I think the only way to find out is we will go through the question and answer based on the questions accordingly. So as long as you are picking up the points from the questions, right? Whether the accounting has got more marks or the ethical issue has got more marks, we will see them soon. Question 1 you to talk about ethical a little bit more, then you should give us more details about ethical issues. Talk about accounting more, then they will give us more accounting issues then. Right, so let's look at this second question. Row B, year end 31st May 2012. First problem, loan application. The director feel that they need a significant injection of capital, that means they need money, in order to modernize plant and equipment. That means to buy PPE. Because the company has been promised new orders if it can produce goods to an international quality. The bank current lending policies require borrower to demonstrate good projected cash flow, as well as level of profitability, which would indicate that repayment would be made. So now it's not for personal bonus, it is to take loan. And in order to take loan, the company must show good cash flow and must show good profit. Alright, if I'm the director and I would like to manipulate the financial statements, these two are the good area that I can target. However, current projected cash flow statement will not satisfy the bank criteria for lending. The director have told the bank that the company is in an excellent financial position. That means telling lies, that the financial results and cash flow projection will meet the criteria. Director instructed the chief accountant to prepare a projection to this effect as soon as possible. That's what we're missing out. Can you add them in? As soon as possible. Now for the first matter here, which is the loan application, we cannot see any accounting problem at the moment. We see mostly the ethical issues. That is, number 1, the director told lies to the bank that they are in an excellent financial position. And number 2, right, the director instructed the chief accountant to participate in this manipulation. So we've got two ethical issues here. So how would you want to discuss this? Would you want to discuss this now? Or would you want to talk about accounting first? Then we need to talk about ethical issues. I think would not have any restriction as to the order, because you look at the requirement, then you know, right? The accounting and ethical issue will be combined together. That you got no restriction in presenting facts. But maybe I would like to, based on my preference, to talk about accounting first. Then only I talk about ethical issues, because we might find new ethical issues when we read the accounting points. But to you, maybe you have a different thought. You might want to talk about ethics first, following the heading, loan application, which has no accounting point. Then you'll talk about sale of land, and most likely got accounting point, intra-group transaction, and then the chief accountant concern, which seems like the ethical issues again. So I'll follow my preference to talk about accounting first. To increase the chances of getting loan immediately before year end, Robbie sold land to a third party at the price of 16 million, with a choice to buy back the land on 1st July 2012. The year is May 2012. So 1st July is like 1 month after year end, for $16 million plus a premium of 3%. Now, sell land and buy back land. Sell land before year end, buy back land just 1 month after year end for 16 million plus 3% doesn't seem to be an honest transaction, because the question also further say the market value of the land is 25. So what are all these jokers doing? If the market value of the land is 25, why not the transaction price is at 25? Why the transaction price is at 16? This is not a sale. No matter how we see, it doesn't seem like one. If it is a real sale, Robbie would have sold the land for 25 million, not just 16. So we cannot account for this as a sale. We must account for this as a short-term loan. The 3% is a interest expense that we'll recognize this next year, because the money collected is immediately before year end, so we cannot charge interest yet. But interest will be charged next year in the month of July 2012. Carrying amount of the land 12 million. Robbie accounted for the sale, consequently eliminating the bank overdraft as at 31st May 2012. There's again one word missing out. So I already say this is not a sale, doesn't seem like one, but they have accounted for the sale already. Now, if they accounted for the sale, right, they recognize a gain on disposal of 4 million, which is wrong. So in my answer here, I need to first justify that this is not a sale, giving my reason that the market price is 25, so there's no reason for them to sell at 16. Instead, we should be treating this as a short-term loan, and the land is just a security to get a short-term loan. So we advise Robbie to remove the gain of 4 million. Regarding the bank overdraft, right, there's no issue at all, because this 16 million received, although it can eliminate the bank overdraft as a cash inflow, right, after we debited the bank overdraft, we'll credit to a short-term loan. So there's no change to the current liability at all. Right, so let's look at the answers accordingly. A new question now. This is page 6. I'm showing you the first double entry. You do not need to show this in the exam. But just in case you cannot visualize how the transaction had gone through, I just put it as for reference. Robbie did this. And then our correction, this one you can put to the exam. Correction. We need to reinstate back the land. We need to remove the gain. Because we never have any sales before. Alright, then we credit this to a short-term loan. So by right, the entry is just debit bank overdraft, eliminate the bank overdraft, and credit a short-term loan. But Robbie had accounted for the sale, which is wrong. So that's why we are here to do the correction. Again, this is what Robbie had done. You do not need to show them in the exam. Alright, so this is the end of the first small matter. If you need more time, please let me know. Right, so I go back to the question to look at the second matter. Intra-group transaction. Okay, there's again some word missing out. The printing format have a problem. Subsidiarily held. So property. Can you add some words here missing out already? To Robbie at $1 million. Right, so the complete story is the subsidiary of us, Hale, sold a property to us at 1 million. But the market price is 2.5 million. Again, something funny here. Subsidiary sold us a property should be at around 2.5 million. But subsidiary sold to us at only 1 million. The carrying amount of the property in the subsidiary account is a depreciated historical cost of 1.6 million. So in this case, right, the subsidiary make a loss, of 0.6 million. By right, they can make profit, because the market price is 2.5 million. But I'm sure we have forced them to sold the property to us at a much, much lower price at only 1 million. After purchasing the property, we adopt fair value model on the investment property. So we are treating this as investment property and recognize fair value gain of 1.5 million. because Robbie purchase price or purchase cost is 1 million, but the fair value is 2.5 million. So Robbie had recognized 1.5 million fair value gain in order to show better profitability to the bank. The director believed that there's no ethical issue arise because such transaction will be eliminated within the consolidated financial statement. Ethical issue I'm going to discuss in detail later, but now I can just hint to you. I don't think there's no ethical issues at all. Is that number one, don't talk about console first. Just talk about single entity financial statement, the parent account and also subsidiary account. The transactions are not fair. Subsidiary should not make a loss, but they make a loss. Parents should not make gain, but they make gain. So while it is not affecting the console financial statement, it will affect the single entity financial statements. That's one issue. Second issue is, the question didn't say how many percent we had in Hill. So this subsidiary could be 100% owned, and this subsidiary could be just 80% or 70% owned. Now, let's say the subsidiary is not 100% owner. That means they also got other shareholders of 30% or 20%. And when subsidiaries suffer losses, this is not fair to other shareholders of that 20% or 30%. Because by right, the subsidiary can make profit. Carrying amount 1.6, market price 2.5 can make some money there. So Robbie say there's no ethical issues at all. This one we will not agree. And I might want to throw all this into one same discussion, which is under the ethical issues. So what I can talk about accounting for this is at least we need to show a related party disclosure. I don't see anything wrong from accounting point of view. Subsidiary sold at 1 million, that's their choice. Parent forced them to. There's no buyback option. And under fair value model, they really can, they really can recognize a $1.5 million as a profit. But what we want them to do is to do a disclosure of related party. So the heading for this is intra-group. But let's look at the answer for this. Accounting very short. Ethical will have a bit more thing to discuss. Right, accounting no problem, but need to do a related party transaction disclosure. Alright, I think you have done this. If you need more time, please let me know. So we go back to the question now to look at the next point. The chief accountant feels that the above transaction might create professional issue with IFRS. Yeah, the first one is the wrong recognition of the gain on disposal. The second one is probably a related party disclosure lah. And ethics a lot. Forcing the subsidiary to dispose at a low price really will create a lot of ethical issues. The directors also told lie to the bank, and director also force the chief accountant to participate in this kind of manipulation. The chief accountant has only recently joined Robbie. Can I check with you? Now, this chief accountant could be newly graduated, maybe, or maybe not newly graduated, very experienced guy, but have just changed job lah, joining this new company for few weeks or few months. Now, can I check with you? Being a new staff to the company, which could be experienced accountant, could be non-experienced accountant, but just a new staff to the company, what kind of problems that a new staff can face in a new company? And has openly stated that he cannot afford to lose his job because of his financial commitment. Now, openly stating personal problem, this is a professional behavior issue. Which we can also mention this is part of the answer. Now, in the office, I'm not sure whether you have seen uh, people like this before. They are very big mouth. They always talk negative things, the personal problem openly. Some will always talk dirty jokes. When we talk about work with them, then they will bring some dirty jokes out and then they laugh themselves, and be like, what the hell are you doing? We are doing work here and you talk about dirty jokes. You go back tell to your mother, okay? This is an office. We want to do work. Some people like that. They like to talk dirty jokes. Some people like to touch people one sexual harassment, men touching woman or woman touching men also got okay? Men touching men also got woman touch woman also got. All this kind of professional behavior, if mentioned in the question, we can also raise things up. Now, this accountant, other than having professional issue, this one will also making him have an independence issue, not independent in appearance. In mind, I don't know lah, but in appearance, definitely not lah. Because you have been telling people that you cannot afford to lose a job. That means if your director force you to do the manipulation, you will agree also, isn't it? So everybody have a lot of ethical issues here. This accountant really had to touch up himself first. After that, the accountant should discuss with the director lah, to stop the manipulation. If the director refuses to listen, then just bring this to audit committee. Quite a standardized answer here. Right, so let me write something to whack the director first, then whack the accountant, then we'll advise the accountant on the next course of action. So we have now ethical issues. land or active land นะไอ้ over statement เนี่ย raw b You shouldn't go by too long, because this question has got only 18 marks for the technical point. So if I split half, 9 for accounting and 9 for ethics, we have already written things for too long, for say the ethical issue. So it's time to have a closing, advising the accountant what to do. Right, the accountant will never be able to win the directors if the director refuse to listen. So the only internal source now is the audit committee lah. If the audit committee still not listening, then the next course is to maybe talk to the external auditor, get advice from ACCA and this that. But we shouldn't go by too far because the question also never indicating any further story that involve the external party to us.